Andrew Holland of Ambit Capital is with us right now with his views on how much longer this global pullback rally can continue. Can it surprise on the way up, or is it getting overcooked in the near term? Andrew, morning. Thanks for joining in. What's your call now? Last we spoke, you said that eventually things will get better, but before that there is another leg down. Are you revising your view in the light of the recent rally, or do you think that leg down is still pending?
No, we're not changing our view, Adain. Basically we are becoming more bullish global markets, which is what I mentioned last time on your show. But the recent rally has been, I think, a little bit more forceful than most people expected. But the evidence I've seen in February is too shallow in terms of the data for me to get overly kind of excited. And I think, if anything, when everyone's talking about these green shoots and the summer coming, then I think they're going to be surely disappointed. There's some more bad news to come across, in terms of economic data. And I'm really talking about unemployment. I'm talking about credit card delinquencies. We seem to have missed the bad news that Romania got bailed out by the IMF the other day. The UK can't get its gilt auctions off to investors. And Hungary's got a pension fund problem. So all of these things just kind of, in an upward market, just get forgotten. So I do expect another sharp pullback in the markets. But that said, I don't want to be in the bear camp here. I am optimistic more than I have been for a long, long time that global markets are nearing the bottom. I think we've just got one final and probably sharp sell-off in the markets to come.
Andrew, morning. You do indicate in your report that for India you continue to believe it will remain off the radar of investors for most of 2009. And one thing that's enthused the markets is the kind of FII money we've been getting in. You would not make too much of it?
No, not really. I mean, I think we're going to see the rallies coming through in the developed markets, and that's where the money flows are going to remain very strong. Emerging markets, obviously will pick up on a sustained fundamental, kind of move higher by global markets. But India's got its own elections coming. It'll take 6 months at least before we see what the policies are going to be doing for the economy. So India remains a 2010 story, not a 2009 story. That said, our range on the index has been and continues to be at a low of 7,000 and a high of 10,000. We'll probably end the year at 8,500. So, I'm not massively negative from here. I just don't think India's a play on the global recovery. I mean, we all say it's a safe haven because it's a domestic-led economy. Therefore, you've got to be going for much higher beta in terms of global recovery. And if you want a warrant on global recovery, you go and buy Korea or Japan. And that's the easy call to make.
Last few days, we've seen the return of FIIs after a long time to this market. Andrew, I mean, they've put in nearly 3,000 crores in 6 days. Do you see that as a sustainable putting back of risk on the table, or continued flows through the month of April?
Yeah, I'm not sure how much of that is short covering. It's always difficult to get to those numbers. But what I'm really thinking here is that you've had money put back to work. Everyone's sitting on cash globally, and it's been put to work over the past few weeks, and India's benefited from that. Do I see this as a sustainable move by FIIs? No, not really.
What about the big move that's occurred in other markets, Andrew, i.e. the commodity space? What have you made of that, and where do you see that headed? I mean, do you think, for instance, the commodity rally could extend itself while emerging markets could not?
It's a little bit of play on the dollar. The dollar's been weakening. That's been helping the commodity trade across the BRIC countries. And India, whilst it's not a big play on that, obviously its index is full of commodity-type companies. So, that's been helping the index in the short term as well. There's two schools of thought to my mind about a weak dollar. Does a weak dollar mean that the economy in the US is getting much worse than we ever expected? Or is it really just a short-term phenomenon that we'll start to see being reversed? Because I think Europe is just looking completely awful, and I think it will continue to be that way. So I see the dollar getting stronger in the next quarter. So, that could reverse that global trade again. Ultimately, commodities will rise on demand. And I don't see demand, picking up this year that significantly to force a huge rally in commodity prices.
So what are you calling this, Andrew? Is this one of those classic bear market rallies which look spectacular as they pan out, but no more than that? Because people have got a bit more optimistic than that the last few days, suggesting that this could be a bit more meaningful than the 3-week rallies or 2-week rallies that we've seen a couple of since October.
You could call it a bear market. You can call it what you like. You could say it's the new bull market run. But basically, it's to do with some signs which I mentioned in the Ambit report of saying we're close to the bottom for global markets. And some of these signs, you'll continue to see that things are starting to stabilise. But when you see these figures, you've got to take them as only one month's data at the moment. And I do believe that the economy in the US and Europe has still got a further leg down. We still have some more problems to wade our way through in terms of the financial sector. And I think this will come back to kind of spook the markets again. And I think that's why we'll see a sharp fall in the market. But we're close today into the kind of markets bottoming out now. And I think we've got to look for that. But at the moment, I'm not saying that this is a fundamentally based rally, which I would be buying into right at this stage. I think the risk is to the downside now. We might get squeezed a bit higher, but I think it's all but done for the moment.
How bad do you think that drawback might be in terms of price destruction, Andrew? Because there's been talk along with this rally that maybe equity markets have put the worst behind them for 2009. Do you think a sharp fall could indicate breaking the bottoms we've made?
One of the interesting things is if you look on when the markets hit kind of lows globally in early March, the VIX hardly moved. It was around 45, 47. And even on this sharp rally upwards, the VIX is holding around 40. So that tells me that there's still capitulation to come. My view would be that earnings in the US look as though they're going to be kind of south of 60 for the S&P, and so you could think of a figure nearer to kind of 600 to 650. So we could look to retest the lows again. But then I think we're probably done.
Andrew, thanks very much for joining in as always. Thanks for your perspective. That's Andrew Holland of Ambit. He's authored a report suggesting that there is one more leg down coming, so don't get too carried away with this current rally. So you've heard